for waiting. Welcome to everyone that's joining live and everyone that's watching after the fact. We have, super happy to have three amazing builders here with us today. We have Pierre from founder of Cal.com, Sasha, one of the founders of Parallel, and JJ, founder of OSS Capital. And I think we couldn't have found a better crew to just jam on, building something new and cool in open tech. So I need to some technical issues. Anyways, I'm back. Yeah, and so we're just going to talk about building cool stuff today. So I think maybe just to start off at the easy place, we maybe just go around the horn here, talk a little bit briefly what you're building, and maybe just kind of how you got into this world of building on open stuff. So maybe Pierre, I'll kick it over to you for first.
Yeah, well, funny enough, my career started in open source when I was like very, very young. I think WordPress 2 or so came out, like 2 or 3. And I was just doing some plugins and themes for WordPress. I was probably like 16 or so, 15. I don't remember, I have to double check. But and then I took a big detour to just build private source startups for the last 10 years. I did one startup was a marketplace to buy and sell magic cards, so that's kind of interesting with Sasha from Parallel here. So I love trading card games, and that one got into Y Combinator around 4 years ago. Geez, time flies. So did YC, spent a lot of time in the Bay Area, and then came back to Germany and Europe. And just recently started Cal.com. It's an open source scheduling infrastructure product. We have both consumer-facing like products that just cal.com/username for your own personal link, but then we also have like very embedded infrastructure services for like anywhere from enterprise, healthcare, governments, you name it, that need like mass scheduling. So yeah, that's kind of like the last 10 years just been busy building. Every day I'm trying to build something new, so that keeps me excited.
Amazing. Yeah. Thanks so much. Maybe JJ, I'll popcorn it to you.
Sure. My name is Joseph Jacks. People call me JJ. I started a fund called OSS Capital 5 years ago next month, and super lucky to have invested in Pierre's company and Sasha's company. And we invest in open source startups exclusively. So we're kind of weird. We're the only fund that does that. And the 5 or 6 years prior to OSS Capital, I started a couple of open source companies. Both of them kind of died. The first one sort of had like an acquihire outcome. I learned a lot about open source business models and licensing and community building and stuff like that, mostly through this project called Kubernetes, which is like a DevOps infrastructure project that lets you run Docker containers and sort of DevOps systems on a bunch of computers. And infrastructure people use it pretty regularly now. I was very lucky to start the first company in that community and the community conference. And I'm kind of known for being really unhealthily probably obsessed with open source companies, tweeting about them all the time, talking about them, drawing weird metaphors. Yeah, that's basically me.
Yeah, well, I'm a very happy consumer of your weird metaphors and tweets. So thank you, Sasha. Maybe talk about Parallel.
Yeah, so my name's Sasha. I'm one of the co-founders of Parallel. Parallel is a trading card game that's built on blockchain infrastructure. Obviously, like, you think about Magic or Hearthstone, and in the non-physical forms, one of the big problems is that, they're not really trading card games because the trading is not really possible anymore. We built this, game that's in beta called Parallel, where you're able to own your cards, own your cosmetic assets, built on this kind of open architecture. And yeah, we're in closed beta right now. So if you want to check out parallel.life to see what it's all about, you're welcome to. But prior to that, got involved particularly in the blockchain space pretty early on, around Ethereum, and a couple other networks that, I was fortunate enough to participate, in building different applications and kind of experimenting with, and it all kind of culminated into, stuff that we now do and deliver for the trading card game to be uniquely functional on this open and distributed network.
Yeah, very cool. And Parallel, I think looks like it's been going like gangbusters.
It
I was
has.
fortunate enough to, jump into the beta. But it's super cool. Yeah, so congrats on. I mean, both
Thank you.
Cal.com and Parallel, I think, have been just real success stories. So we're very, very lucky to have you. I think maybe one of my first questions, it's maybe a good one for you, JJ, is like, I think if you kind of look from afar, it might seem that Parallel and Cal.com are like pretty different kinds of businesses, companies, right? So I think what we mean by open tech, it seems like it can be kind of broad. So I guess, how do you think about like what makes like an open tech company? Like I guess it's also a question of like, what's a good fit for an OSS Capital?
Two answers to that. I'll give the more technical answer, and then I'll tell you how and why we invested in Parallel, which is
Great.
a slightly different answer. So OSS Capital, the thesis is basically, we think open source technologies are sort of the future of all, digital innovation and maybe even physical innovation. And so the way we look at investing is we sort of split the world into two types of companies that have a closed core on one hand, and then on the other hand, companies that have an open core, on the other hand. And that's kind of like 50,000 foot view. So kind of going a little deeper, what does core mean? So like companies that have like a product or a service, there's typically some like runtime or engine or sort of like essence or nucleus or whatever metaphor you want to use that sort of drives everything. That's like the heart and soul of the business, basically. And most companies in the technology industry, the software industry, consumer internet, all kinds of things, they basically have this black box. It's like a proprietary system of some kind, and then everything else like builds on top of that. So for like Google, it's their their indexing and all of their ranking logic. For Microsoft, it's like the proprietary source code behind Windows and Office and all these things. And maybe for Uber, it's their data distribution network for kind of connecting and routing messages between the drivers and the riders and all this kind of stuff. So, but open source businesses, they have some open source technology that anyone can use, that anyone can see at the heart of the business, and then everything sort of builds from there. And so it's sort of like the inverse of the conventional way of building a company. Instead of like a black box being at the center, you still have some proprietary aspects, but they're sort of pushed to the edges. They're pushed kind of like to the periphery, or the metaphor would be like the crust or the frosting or the wrapping, right? But the core is very permissive. It's open source. And so that's OSS Capital's thesis. We've invested in a bunch of companies. Most of them, I'd say 90+% of them look like Cal.com, 95% maybe. So there's like an open source project on GitHub. And there's a community around that, and you sort of have like, in some cases, maybe like proprietary alternatives that you can point to. Like, so for Cal.com, there's like Calendly. For things like MongoDB, there's like Oracle. Some projects like explicitly say like, we're the open source version of X. Others are just sort of very clearly just better tools and projects, and developers just default to them. So I'll tell you the story about Parallel now, which is like maps to that and is sort of technically in thesis for us. But we just got crazy lucky with Parallel. I don't know how, there's no other way to say it. So one of my investors is this guy, Chad Hurley. He's the co-founder of YouTube. He's also an investor in Harris Company. And I got to know Chad early on in building the fund, and was hanging out with him, and he would only talk about Parallel. Like literally, he was like drunk on Parallel. He was like, there's this thing, and it's like, it's the future, and it's like a sci-fi game, and it's, it's like humanity is like at war with other humanities. And I was like, what the fuck is this guy talking about? This sounds like some kind of, because Chad's like, he's controversial, and he's got a lot of, interesting characteristics, but he's a brilliant person. He's very, 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 innovative. So I was like, what is up with this thing? So I basically decided to go down this rabbit hole, and correct me if I'm wrong, Sasha, but I went on Twitter and was like, okay, there's the Parallel account, and I'm just gonna like DM this thing and see what happens. So Parallel was really very almost accidental and like kind of strange how it happened. And yeah, it was, sort of midway through raising our first fund, and we just got insanely luck, and luck is the only way I kind of describe it. But if I go back to the description initially of like what constitutes an open source company. I mean, Parallel's open core is this open source project called Ethereum, and it's on GitHub. It was created by Vitalik Buterin. It's a very vibrant and amazing open source community. Concretely open source as a technology, but that's kind of where the differences sort of begin and end. You have this whole universe of Web3 and crypto, and there's this entire like sort of lexicon and kind of movement that is very kind of concretely distinct from sort of conventional B2B software companies, enterprise software companies, consumer internet companies. That I think Parallel is certainly in that category, but I think Parallel is also sort of transcending that because they're building something that is hard to really put your finger on. Is it a gaming company? Is it a software company? Is it a networking system of some kind? Is it a marketplace? It's kind of all those things. It's like a fractal of a lot of, touches on a lot of interesting ways of building a company.
Yeah.
So I'll stop there.
No, that's really useful. I mean, it maps to, I think we have, tons of projects of all different, shapes and sizes apply. And a lot of them kind of in that form of more like the Parallel, where it's like you're building something on top of an open, ecosystem, but maybe you yourself are not, building like a big open source project. And I think, we're still trying to figure out like, where are the similarities, where are the differences, how do we support builders that are, doing kind of different things. And so I guess I'm curious, Sasha, on that note, maybe like, you've built a lot of stuff in your career, a lot of different things. Does it feel different now? Like, JJ's mentioning like building on top of like an open ecosystem, like Ethereum.
Yeah.
Does it feel noticeably different than, let's say, building something more traditional, so to speak, like in a past, what you've done previously?
For sure. Yeah, it does, for sure. I mean, you're still writing code, you're still shipping quality products. But the difference is that there's like, on a regular basis, someone builds a tool around what you've built, and someone builds, an iteration or a variant on what you've built and deploys it. And so you're getting to see like real-time iterative, and this has happened like many, many times now. There's like, I think there's probably over like 40, or probably in the ballpark of somewhere on the conservative side, 30 on the, maybe more generous side, 50 different, tools that people have built off of what Parallel has deployed. And like a lot of times we're like, oh, that's really good. Like sometimes when something's really that good, we just integrate it into our product and reach out to that person and say, hey, like, is it cool if we use this? And so it is different in that on a regular basis, you have people iterating on stuff you built. And then, and as that happens, what we're finding more and more is like our appetite for that's increasing. And so, how do we open up game data? And so instead of us trying to, create the smart contracts and interaction points with game data, be it win-loss ratios or other things, like how do we just open that up and empower other people to build on that data set? And so I think it is different in that, in the previous consumer mobile startups that I've worked on and built, you're kind of like very much a walled garden, and like putting soldiers on the top of the wall to protect everything. And anytime something pops up, you almost want to like whack-a-mole, which doesn't make a lot of sense, because when you actually, somewhat counterintuitively to the maybe traditional startup, once you actually do open it up and people enjoy the product, care about the IP in our particular case, and build their own versions of products, you start to see how people who don't think like the folks who work in the studio think about organizing a product. And it's a lot of times it's a breath of fresh air. A lot of times you're like, oh wow, like this is a totally different take on solving the same problem, and we probably should have thought about it this way as well. And then we just try to integrate it. Like we reach out to the community member who created it and say, like, this is really cool, like can we add this to Parallel.life, and can we like to our core site, and that way more people can use it, and they're obviously happy. They're like, yeah, that's great, this is like what I wanted. I wanted to make something that was useful for people and solve the problem for themselves.
Yeah, that's super interesting. I mean, we had Jesse Pollock on this talk last week, and he was talking about kind of like the new open compute on these blockchains. And I think it just feels like a slightly different way to think about building. And maybe I'm curious, Pierre, also in your experience, maybe for everyone, all of you, it's like, should builders be thinking about building differently? Because there are all these, if you're creating something open, right, you have all these emergent possibilities. So is it, does it change how you need to think about, creating capabilities for your product? Is it a little bit more like, let's just see how people use this? Or is it the kind of same old bread and butter of go out there, do the user research, find the problem, build the capability that, solves that problem? Like, I guess, has it changed how you approach just kind of the day-to-day of building?
I see a lot of pitches, startup pitches from other founders, and I'm like, why is this not open source? Like, almost when you have this kind of like, once you're in a bubble, what is the saying? I forgot this one, but like, if you, let's say you buy a Tesla, suddenly you see Teslas everywhere, right? Just this change of perception. I'm most of like the same gut reaction that people have, like, oh, I'm afraid to open source my software whatsoever. I have kind of like the opposite opinion nowadays of like, why is this not open source? Like, you would be so much faster, further, with more contributions, more feedback, faster feedback loop, and better go to market, especially when selling to something like developers or people who want to build in your ecosystem, right? And in fact, I've actually advised another startup to open source their code base, and they've been flatlining for a long time. And now there's some early signs of traction. And it's like, you start to see these patterns where you're almost shooting yourself in the foot if you're not open source, especially when selling to developers. And I find that very interesting because it's kind of like the 360, not 180 degrees opposite perspective than traditionally some people were saying, like, if you open source your product, you're doomed to fail somewhat. So that's something I've definitely seen more and more, and I'm actually also advising people to go down that road to explore. Yeah, it's been an awesome journey, especially when you consider also that a lot of open source is being sold to enterprise or governments or healthcare. It's a huge selling point. It's a huge selling point just to say something like, well, if our shitty startup, which likely happens, goes out of business, you can still use our software. Like, nobody gives a shit about like automatic running WordPress, or we've just recently seen Rome tools unfortunately shut down, and there's a new fork, that the tech lives on. So for those companies, for those customers, we see this every day in our sales, that they really appreciate us being open source, and they would not buy a cal.com that would be closed source, right? So it's a huge difference.
Yeah, I mean, that was one of the questions I wanted to ask. Is it makes total sense, and I guess one thing that I've noticed, even talking to people, is, I mean, cow.com, Parallel, these are big businesses, right? And there's tons more examples. If you go through the OSS, portfolio companies, you see a lot of great businesses, and so I think they're yeah, shout out to you, JJ. But
all the founders.
Like
I'm just the guy that was lucky to intercept.
Totally. I think for like, more, let's say like traditional business models for software, like, SaaS, we have like freemium and free trial and all these kinds of things. And there's a lot of, like accepted wisdom about those things, like what you should make free, what you should charge for, what's your value metric, like all this kinds of stuff. You can read tons of blog posts about that. It feels less clear to me in talking to people, like what the mental models are for that. So maybe we have this mental model for cow.com, which is like, hey, there's a free, simple version that you could use, but it's also like, we're going to go and sell to governments, or we're like any like highly regulated industry is going to need to buy an enterprise account. Those are huge contracts or whatever. I mean, I'm probably oversimplifying the cow.com business model, but just in general, like what are, I don't know, do you have ways of thinking about like what should be free, what should be open? Because it feels like it's one of those maybe like counterintuitive things where you could actually probably open up a lot more than you assume, and like what you leave is still like really valuable as a business. But I'm just, how do you like, guide other people, other builders that you come across, and how to think about that?
Yeah. So JJ and I actually had this fun road trip from Denmark to Germany. Well, other way around, from Germany to Denmark, and we were like, there has to be a better playbook, almost like how to, because you mentioned all the SaaS playbooks of like, here's your SaaS benchmarks, here's your onboarding, here's your freemium kind of like handbook. Like, those stories have been written by virtually every SaaS company in the past. It's very much adoptable. For costs, commercial open source, it's very different because, as you mentioned, the business model is also very different. Like, if you say freemium, it is literally free. Like, the thing is free. You can take it, you can change it, you can run it yourself. So the value capture mechanism is very different. So me and JJ were in this car and we were like, how can we like really write this down into a more productized handbook and really help startups and new founders. Maybe it's not even a startup, but just like open source contributors and maintainers to build a much better product and business at the end of the day, because the business feeds back to the repository usually. And we called it a Git round, right? So you don't raise a pre-seed round, you raise a Git round, because it's a very, very different industry. It's all the mental models are different, pretty much all of them. And so what we've come across is this idea of like AppFra is one of the new concepts that we're trying to popularize, where you have a free app, and then you have the sold infrastructure. That's kind of like what Calicom is doing. So the app part is the Calicom account that is free. Anyone can sign up, but then the infra is where you monetize the product, and where it's really sticky. It's more developer focused. Like the average user doesn't care about open source. They don't care about like developer friendliness. They just want to have a good product, right? Good app. And then the infra is all the learnings that you've learned from the app, you're applying to your infrastructure, and you're reselling the infrastructure to whatever business needs scheduling. And you can make this example for Documenzo, another great portfolio company of JJ that probably has a very good consumer-facing app at the end of the day, and then sells the infrastructure of signing documents or signing objects to enterprise and healthcare and all these freaking markets that are out there that need proper infrastructure. And so I think there is a really cool playbook to write. Now it won't work for every commercial open source business, of course, right? But I think we're still in the very, very early days. We're almost in an open source renaissance, and it's really cool to be like on day zero and being really pushing the environment forward.
I'll add a couple things to your question. And the car ride to Denmark was last week, so this is very much materializing as we speak. In fact, it's unfolding during this meeting. I have a more philosophical answer to this. I think eventually everything is open source, like over time, like 50, 100 years from now. And the only defensible business model is basically your pace of improvement, your pace of innovation. I mean, Elon literally just like explicitly says this these days. He's like, doesn't matter, patents are for losers. We're going to give away all of our patents. We're going to open up our charging station networks to other car manufacturers. I don't know exactly yet if they're going to open source or open up the autopilot software. They're probably going to license that. But the point is, like, over time, I don't think like defensibility at the level of what you built matters. I think it's the fact that you're continually releasing awesome stuff, and your consumer and your customer is going to care and notice that a lot more than the single snapshot of what you did yesterday or what you did last week. Right. And so, HashiCorp just released this new license model called the BSL, the business source license. It's not open source, but effectively it puts a time box on when all of their code goes back to open source for their core projects. And I think they could apply the same rubric to their, commercial bits and the proprietary things they're not releasing, because customers are just not going to care, right? Like, you're paying money for something that eventually gets open sourced 2 or 3 years from now. That kind of doesn't matter. You're going to continue paying for the product or the service because it's solving a business problem for you now, and only that company can build that, technology for you. So I think that's probably too philosophical and too confusing for most founders to be practical. So that's why I would revert back to like what Per was saying around, like, we need playbooks and handbooks and models for people to really incrementally understand how to actually embrace this, because it's extremely counterintuitive. The reality is very hard to like grasp this stuff as an entrepreneur when you're confronted with like runway, and you're going to run out of money, and you have to raise investor capital, and you have people that need to be paid, and like you don't want to go bankrupt. You're like, shit, like I have to sell something. What am I going to sell? Everything I build is just going to be proprietary, and I'm going to put a paywall on it and try to charge people money. Like, that's the easiest thing. There's absolutely nothing wrong with that. And that is the easiest like mental approach. When you take the approach of building with, Git workflow, and you're like writing code in the open, and there's this like project on GitHub, it's completely different. Like, pretty much everything is completely different. Per met his founder through the open source project. GitLab met his founder through the open source project. There's endless examples of this.
We hire every person almost in the core team was a contributor before. Like,
it's crazy how different. Per was kind of touching at this. How different almost everything is. Hiring, iterating, business models, go to market, even fundraising. I think you have to kind of question a lot of the fundamentals, like how capital efficient can you be? You know, but Buterin didn't raise any money for Ethereum. I mean, maybe that's somewhat, you know, questionable, but there was this sort of the initial, you know, pre-sale for the token and stuff. But like, I'm not sure that went into engineering. I think it was just like very clear what the technology was going to be, and then there was a big community that formed around it. So yeah, my view is that over time, everything is open source in the digital business world and tools world. And then the way capitalism will work is essentially you have companies built around trust, and they ship at a rate that other companies cannot match. And the rate of shipping better and better improved versions of that product will cause companies and customers to subscribe with some kind of, you know, payment. Could be crypto, could be dollars for that product. And basically, so as your rate of innovation goes down, your rate of defensibility and creating a valuable business also goes down. So they're directly correlated. As your rate of innovation goes up and it's sustained and compounds over time, that follows your rate of value capture and value creation. So like, I'll say one last thing. This is kind of rambling. Today, I think the value creation, value capture, like differentials, are completely disconnected from reality. Economics has this term of value capture, which is like markets and revenue and dollars. And value creation is this kind of like fuzzy thing, like Google search. Like, how much value does a Google search response give a user? It's free. It's a free service. Is that reflected in GDP? The answer is no. Google indirectly monetizes that through ads. And so value creation is this kind of fuzzy thing. I think in the future, if all the infrastructure and technology world were open source, you'd have a direct correlation between value creation and value capture. And a good example of this is in finance with hedge funds. I think Nat Friedman was just saying this yesterday on Twitter. I saw this snippet. He was like, if you did a survey of all the top 10 hedge fund managers in the world, and you said for your top analysts, if they did a monthly Zoom doing a look back of their top trading strategies, just 10 minutes a month, right? At the end of the year, how much of that would cause a reduction in profits? And Nat actually did the survey, and it was like an 80% reduction in the profits. Okay. And then Nat said, okay, at what time window interval would you need to change in order for the profits to not be that affected? And the hedge fund managers said 10 years. Right. And so there's like so few secrets in the world that actually are this fundamental basis for how companies generate profits and capture value. Like, there's all these asymmetries, and the world is like super inefficient as a result of those asymmetries. And open source basically makes information asymmetry go away, because there is no more information asymmetry. It's all symmetrical. Everyone can see the same information. So that's kind of how I think about it. But that's like a very technical way of describing like the vision behind a lot of this stuff. I think founders today, they need a much more pragmatic, like accessible path for going and saying, like, oh, I was just going to build this, you know, Flask app that's proprietary and put a paywall. Like, now I'm doing open source. I don't even know how open source works. You know, how do I do licensing? How do I do, you know, governance? How do I, you know, accept a pull request? How do I respond to an issue? Like, a lot of these things are still pretty confusing for people.
Yeah, I mean, I think that's relevant too. I'm going to start pulling some questions in where they seem relevant, but even this one, which is the one that I was going to ask, which is like, at least when I talk to people, I think what you're mentioning in terms of like, hey, I have this thing I'm building, I want to, you know, charge for it, so therefore I should, you know, make as much as possible of it, you know, like proprietary, makes sense. But honestly, I've seen even maybe more so people are worried about losing control, and they're worried about losing speed, because, you know, if you're building something in the open, like if you feel like it needs to be more polished, so it's like, oh, I'm not going to put this. You know, and I think this is kind of the question, is like showing the way. It's partially like, you know, can I build an end-to-end solution that, you know, really is great, and then maybe I'll open it up after the fact. So like, you know, and I'm curious, like how do you think about that? Even like Sasha, what you're mentioning is like, you're designing a game, right? And it's in some ways controlling that experience. I mean, so much work goes into that, right?
But I
so
think, yeah,
go ahead.
yeah,
Go ahead.
but I think what JJ said actually applies really beautifully still to games, and like I think a lot of the world's greatest games were variations where community members contributed and modified games, and like the vast majority of the most popular games that we play today come from like forks of existing games that the community contributed to and modified to make a way better game. And like I think it's a beautiful example of shipping a great product to begin with, like, or a foundation for others to work with, and allowing them to iterate and modify that and make it better. So I think a lot of these same principles apply. I think maybe it just comes down to what components of what you're building are open and what components of what you're building are like kind of where your contributions are the leading factor of value creation. So, and like Parallel fully intends on doing that same thing. We've been building this 3D asset repository as we've been making our 2D cards. So we have hundreds of these pieces of assets that include, vehicles, weapons, characters, landscapes, all the core components of creating a game in UE5. And what happens when you unleash, the power of everyone who's super passionate about this game in its current form and say, hey, by the way, you can now make it in a way more immersive form, and there's no rules. And the only thing you need to have that governs your creativity is really this matrix of values that says this gun deals this much damage, this armor gives you this much benefit, and like just unleash the general public to create a way better game than we probably could ever create. And you just got to be honest with yourself about that as like a game developer or as a game studio. Is like it's often the case that you make your version of the game and everyone else makes it better.
Reminds me of all the modding community in like GTA and stuff. Like, I mean, think about how much, or Roblox is like the most. It's not
League of
a
Legends, like all this stuff, right?
Yeah, I think the majority of most interesting Magic cards that I remember were actually inspired by community members of the Magic community. And I think the most popular like game format of Magic is Commander, which was also like an
Community
introduction
created.
from the community. Yeah.
Yeah.
So, but going back to your question, Math, I hope you're still around. When building open source, would it be a good strategy to show the way before opening up? I don't think so. I think some of the best projects that I've been following, and also including Cal, were open source from the very first day, and we actually we actually had just a landing page outlining, yes, it's open source, but like nothing's been written yet. It's just an idea, project stage, go sign up for the waitlist and like check it out. And that was enough for people to sign up for a waitlist. Like if you have a great idea, if you have a good roadmap and a good vision of where you want, good products to look like in the future, that's totally fine. Like, and also if you look back on some history lessons, like we launched 0.1 on Product Hunt, and it got like product of the day, of the week, of the month, almost of the year. And it was crazy shit. It was so bad. Like it basically only connected to Google. There was no app store concept. Like everything was hard coded. I remember the calendar interface, the core piece of our product had like, it would start on the 1st and it would end at the 31st, like the layout, and you all know that calendar layout changes according to Monday, Tuesday, etc. So it was really bad. It was just really, really bad, and the code was bad. Like me and my co-founder just basically shit it out and see what happens. And open source makes you write good code. Like it's the other way around. The more shitty your code is, the more people want to help you and contribute. Like the best way to get an answer on Stack Overflow is to reply with a shitty answer to your own post, because people will correct you. Like it's so funny. And so yeah, we've had tons of contributions to just would refactor some shitty ass code, and that's perfectly fine. So don't be afraid to put yourself out there. Nobody cares about the quality of your project, especially in the early days. Later, of course, you want to be stable and have good practices in place. But in the beginning, it's really about like what type of problem you're solving. And so yeah, that's, if you can get that done with shitty code, go write shitty code. Like don't be afraid to show what you've built.
Yeah, I would double down on that and say, so Reid Hoffman, who I don't agree with on a lot of things these days, unfortunately, he's an incredible person, has this quote: "If you're not embarrassed by the first version of your product or your thing, you've launched too late." And that's just true. Like, it forces you to execute and like just put things out there. So I totally agree with Per.
Yeah, I mean, I think that's a good segue actually. And its question here, which is, okay, what if you put something out too early and then someone forks it and tries to compete aggressively with you? So, I mean, I guess that's a natural fear for people to have. How do you think about it?
I don't think this has ever happened in the history of any software company. I mean, can you name an example, Anna? Like
This
any.
happens. This does happen in like the blockchain space, right? Where because there's value accrual, right?
Right.
Like short-term value, speculative value accrual. So it does happen there, but
Bitcoin
I don't think
Cash.
I've seen. Yeah. So like if something catches on, everyone starts
Yeah.
deploying capital to some new protocol, some new
Uniswap.
yeah, sure, Uniswap or Friend Tech or anything like this. And then typically what ends up happening is someone else wants to capture that value, deploys a clone or an alternative product as fast as possible because the fundamental code base is open source. But I think we've seen that in the longer tail, that typically it comes down to execution, right? So like typically longer tail, the kind of the company that initiated this concept has probably thought about it longer, harder than the person who's just like, yeah, control V, control C, control V. And like I think people can see through that pretty quick. And it ends up being like a 2-3 day flash in the pan. So if that happens to you, I'd say just like wait 3 days and you'll probably feel better and realize that it was not like a crisis.
I think if the opposite is true, if your fork is actually better than your core product, you need to have a really honest conversation with your team and like in front of the mirror and be like, how did this happen? Because technically, this can happen anytime with any non-open source product. Like, I mean, this is virtually happening with open source alternatives or new products that are just so much superior to their closed source alternatives. Like, it's writing code is nowadays not so hard. Like we're not. I mean, we still pay tons and tons of dollars to engineers, right? But it's at the end of the day, writing code is a commodity. Like finding product market fit, having a good brand, having a good community, having a good ecosystem. Those are your main modes, and those stay the same mode. Like, I can probably fork Documenzo tomorrow, but like I don't have the team, I don't have the resources, I don't have the energy, I don't have a brand. Like, are you going to rename it? That's why also we spend a lot of time and money into having a really good brand with cal.com, because nobody's going to sign up for easyscheduling.biz. Like, it's just not going to happen. And so like take my code, like I don't care, like compete with me. That only makes our product better, because if you figure out something that's amazing, I'm just gonna take it back. Like if you fork, I fork. Like, I mean, that's how evolution, like that's how code, I mean, that's how every engineer works. Like you see
Having said that,
great
Pierre,
stuff.
if your company name was easyscheduling.biz, I still would have invested in you, man.
Thank you.
Yeah,
Thank you.
still use it. I want to maybe move on to, because I know there's a bunch of questions around here that people are asking around basically money, right? So I think I'll bring in this one. So fundraising, and I would even add to this, like, I have some people asking about, there's all these pools of theoretical money that exist for open source projects, grants and donations and things like that. So if you're, really early stage and there's, some other questions in here about what part of even like this business development process should be closed versus open? Should you be fundraising more openly?
Yeah.
So talking, if you're thinking, and I know you guys just, launched your own kind of Git round, like accelerator. So you obviously, have some opinions about it, maybe working a little bit differently. How do you think about getting money as like a early stage founder in open source?
I'll take the founder's point of view, and then JJ can do the VC point of view. I think that's a good idea. And try to keep it short. I would highly recommend to not raise any major money if you don't have a strategy or at least a vision to build a big business. The best startups, and also the least amount of anxiety for a founder, is to have the incentives aligned with your team, including your investors, right? So if you go out there and say, this is going to be $1 billion business, right? And then you turn around and you look in the mirror and be like, yeah, I'm actually fine. Just like, give me any money. Like, I just want to, have some money to, pay my rent. you're gonna have a really, really hard time because everyone else is gonna believe in you. They think you're gonna go public. You're gonna build the next GitLab. You're gonna build the next whatever Confluence or Elastic or HashiCorp, and it's just really, really hard because you're competing with those two visions, right? So if you really, really want to raise funding, be well aware it's a pretty straightforward path. Like you need to be okay, giving up some part of your company, some part of your equity, but also you have like expectations that you need to match, right? And there's a lot of people on VC Twitter who are like, you got to be under pressure. No, the pressure comes from you. Like you need this from yourself. Like if any VC puts you into a box, like you did the mistake of raising in the first place. Like if you don't want to go that way, you should make that decision up front. And that's something I see a lot of times go sideways when people are just like, I need money, let me go fundraise. That is very tricky because a lot of projects are not VC fundable. The good investors say no because they save you from all the anxiety that comes from having a shitty product and VC funding. The bad investors will probably give you money and will be a pain in the ass because you'll never be able to return the money and the fund. And it's just a very, very long, sad journey. This happened to one of my previous companies that was able to raise some funding, but ultimately failed because the market was not too big and the product was not VC fundable. And it's very sad. So going back to that, only raise funding if you are clear that you can execute or you have at least something of substance that you want to take to a big company. And the way you do it, that's something JJ can go over.
I agree with everything Per just said. I would add a couple tiny things, which is like most founders, open source or not, this is just kind of like reality. They don't understand when you're raising venture capital, you have to build like a giant company. Like you have to have the ambition and the real like possible potential. Like if you're building a Django framework that does linting or something, like most likely, even if you're a spectacular talent and your ambition is phenomenal, you're not going to create a company that can generate returns for that venture capital.
We're talking hundreds of millions of dollars a year in revenue.
Yeah, and I think that there's kind of like a problem in the last 5 or 10 years because there's so many new funds that have been created. I'm one of them, by the way. I like created at OSS Capital in the last 5 years, so kind of be suspicious of me too. But I have an institutional kind of fund. There's a lot of funds that are like 10 to 20 million or 10 to 50 million, and it's like some new investor who has kind of like no thesis and no focus area, and they're kind of generalists. There's literally hundreds of these funds, and maybe they don't care because they're just kind of spraying money. But if you're raising money and you raise money from like a top 50 fund, like one of the top 50 funds, you have to create a giant outcome. And I think what Per just said is very true. A lot of open source company founders early on, they're like, I have 1,000 GitHub stars, or I have 10,000 GitHub stars or something. I can go and raise my seed round now. The reality is you should really question, should you be raising money? I think like 7 times out of 10, you probably shouldn't be raising money because it doesn't matter how spectacularly talented you are or how big your ambition is. Your project is most likely not going to be able to create a business that can generate massive outcomes that are a fit for the kind of capital you're raising. If you're raising friends and family money, or you explicitly believe you can create a business that can like generate maybe at most 5 to 10 million in revenue a year, and it's like a lifestyle business, set those expectations, be honest with yourself. But if you're raising venture capital where the expectation is, I'm going to raise a pre-seed, or I'm going to do a Git round, and then I'm going to do a pre-seed or a seed, and then I need to do a Series A, and then maybe another round after that, and then we're going to go public. Like, really question how many companies have gone public sustainably that have stayed in the public markets. A lot of public companies, they go public and then they die. I was doing a board meeting yesterday in a WeWork. Most people don't realize this. WeWork is worth $90 million today in the public markets. 90.
Wow.
Just look at their stock. It's pretty crazy. I'm sure their assets and all of their real estate are worth more than that. So you probably couldn't, if you had like 90 million in the bank, you probably couldn't like buy WeWork, or could you? I don't know. But like they used to be worth tens of billions of dollars. Plenty of companies die after. So you really have to kind of think like, is it possible to create a huge, long-term, sustainable, enormous company as opposed to just taking advantage of the fact that so many people exist now that are just investing in a lot of, kind of cookie cutter ideas and things that look like they could be venture fundable.
I think, yeah, I think the other exception is if you plan to do like an accelerator, or like you raise really small amounts of money, angels, friends, they believe in you personally, but that also means that if you notice your project doesn't go anywhere, you need to make a hard pivot and do something else. Like
Yeah.
if you join YC or any other Techstars, any other accelerator, they invest mostly in you because they know it's too early for them to make a guess whether your stuff is going to go crazy or not. So those are the exceptions, especially when you have a co-founder that you really, really like working with. That's like a power couple, like two amazing people are way better than one amazing person. And so those are kind of like the exceptions where you could be looking at raising funding, but just because, your open source project has some initial interest doesn't mean that that's going to be, the $1 billion business that, like qualify you raising funding, VC funding, right? VC funding. We're talking VC funding, not small angel checks. So yeah, but
Maybe I can jump in on this as well. Like, I think my recommendation, I'm gonna just be like super pragmatic about it, is like build your vehicle. And if your vehicle ends up being a car, you could probably put the gas in yourself. If it ends up being a rocket ship, you're probably going to need a lot more gas than you can afford. And that's just like, let the demand, for your capital needs dictate, and let the vehicle dictate what you need to raise. And if you can finance it yourself from your profit from some sort of business that you're operating, fantastic. Fill the car yourself. And that way, you don't have a lien on it. But if you built a rocket ship when when it came down to the vehicle and you can't afford to fill it, but you believe that it's going to reach Saturn, then definitely get help. And there's going to be a lot of people lining up. If it is this Starship, people are going to be lining up to pay for your gas fee.
VCs loves rocket ships, yeah.
Yeah, exactly.
That is the analogy that VCs use. Is like venture capital is rocket fuel.
Yeah,
everything else is a different kind of fuel.
And but sometimes you just build a car, right? Sometimes it's just a car.
Build.
And that's cool. Like, cars are cool too, right? Like, it doesn't have to be, not everything has to be a Starship. That's all.
Yeah. Well, I know we're over time already. Thanks you guys for hanging around here. There's actually a bunch of great questions here in the chat that we're not going to get to. I'll try to collect some of those up, and maybe I'll shoot them at you over Twitter or something like that. But also, I would just say that everyone here is a great resource in general. I think JJ and Pierre are often doing a lot of tweeting about these kinds of things. Sasha, you're not on Twitter, which is to all of our shame. We're sad. You're great. Where are we going to get more of these insights?
He is on Twitter.
Oh, okay. I couldn't find you. Yeah.
It's
okay. Well, that's.
I couldn't find you either.
Easter egg.
I couldn't find you either.
My handle is Temple Crash at Temple Crash.
Okay, great. This is good alpha. And also, we all need these cool Cal.com and Parallel hats. I think that's one of the big takeaways that I have.
I failed abysmally not wearing one of your hats.
Yeah, no. Well, thank you guys so much for joining. This is super valuable, and
thanks for having us, Joey.
Yeah, definitely. Keep watching these guys.
Thanks.
Bye, everyone.
All right.